loans, etc., must be credited. Number 6, all expenses or losses must be debited. Sorry. Now, number 7, all revenues or profits or gain, that again must be credited. Should I want again? Must be credited. Now that will lead us now. Now I will help you. I'll be doing the analysis with you together. Is that again? I'll be guiding you. It's a journey. You are together. I will not be too fast. I will carry you. I'm here to solve problems. So I'll learn from you too. Now, whenever you sell something, cash sales was omitted in the books of accounts. Is that again? Now, nothing has entered here. Nothing has entered here. When we get there, I'll analyze it now. Pay attention. Don't go. Don't get distracted. Are you ready? Are you ready? Let me fast. You will get it now. You will know how to interpret. You will know how to analyze a problem from the statement. Once you analyze your problem, you can detect what type of account it is. There's a procedure to move when it comes to correction of errors. First of all, you have to analyze the statement. Is that again? To know which of the two accounts are affected. Very important. When you know the two accounts that are affected, now you will now know which account is having the problem. Is that again? Then you start to what? Rectify the problem. Is that again? You must know the type of account. Let's say for YX standard, you must tell us what type of error has been committed. As an accounting student, as a technician, they call us what? Accounting technicians. You are meant to detect the problem and tell the what? Examiner what type of error has been committed. You know, account is different from that of a bookkeeper. Is that again? There are some people that do not go to school, but they understand bookkeeping record. Is that again? But as a professional accounting, you are meant to correct their errors. And that will lead us when we take a topic called single entry and incomplete record. It's an accounting for those who don't go to school. Those guys in radical markets. Or my mom that did not go to school. So you understand how she can know how to, she knows her profits, she knows when she sells at a loss. Is that again? And how to convert that into documenting principle is the procedure. Are you ready now? So let's look at that problem one after the other. Now, the statement says, cash sales. Now, whenever you sell something, remember, when you sell, okay. Good morning, class. Good morning, sir. My name is Kenneth Dike. I want to know your name. Amira. Aliyah. Lovett. Grace. Your name? Marvelous. Okay. Now, there are two aspects. Correction of errors means, in accounts, there are some errors that affect trial balance. Lesson 1. There are some errors that does not affect trial balance. Now, we cannot model them together. So that means the first lesson looking at errors that affect the agreement of trial balance. Is that again? And under these types, we have error of omission. 2, we have error of commission. 3, we have error of original. entrance, abi? Now 4, what again? We have what? We have error of principle. Thank you, error of what? Principle. Then 5, we have what? We have compensating error, abi? We have compensating errors. Is that again? Then 6, we have what? So okay, complete. Thank you, complete reversal. What? Entry or errors or entrance. Entrance what? Errors. Then the last one is what? Under this one what? Duplicating errors. So errors, error of what? Duplication. Duplication. Of what? Of accounts. Good. Now, I would like to look at one of them and analyze it. Because where students always have problem is a question. Now, we must understand the concepts first. Is that again? Now the concept, error of omission. Now all these errors does not affect the agreement of tribalance. If you look at it. Now, what is tribalance? Can somebody define tribalance? Alia. Tribalance. Okay, I'm sorry.
Tribalance is a scale or list that shows the credit and debit balances extracted from the ledger to test their respective accuracy.
Let's back it up. Now, what you understand that whenever you are defining accounting at this stage professionally, you must know how to use the concept. When you define, learn how to play with the concept. You speak the language of accounting, matters a lot. Now, error of how do you know which account is debited? How do you know which account is credited? That is the analysis now. Is that again? Now, the traditional rule. The Indian has the golden rule, but this was the rule that Lucas passed through, the one that formed dominant principle. I will give you the breakdown. Is that again, Lucas? Now, number 1 rule: purchases of goods, whether cash or credit, must be debited. Is that again? 2. Sales of goods. Sales of goods, whether what? Cash sales or credit sales. Or credit what? Or credit, this is the purchases or sale must be what? Credited. Number 3, all assets purchased, whether, have you seen it? 240. Number 1. Now, let's go to question 43. I will write the question out for those who don't have it. It's here.
It's compulsory that everybody should have it. For those who don't have it, they should go out from the class.
Sir, 43.
Okay, sir.
43.
Okay, sir.
Okay. Now, 8,000. Then, you only put correction where you have the journal entry is meant to correct the account that is affected. The one that is not affected does not pass through what? The journal entry. So this one I'm going to just quickly prepare the journal entry. You just prepare the journal entries. Now the journal entry here. So, or we can even use it, the journal entry here. So for the journal entry here, the journal entries